Well, we have Sid Khemka of Motilal Oswal Financial Services, who joins us on the show. Hi, Siddhartha. Good morning and good to see you in. I wanted to ask you about, this Vishal Mega Mart. There's going to be a large trade that's going to take place. And, there appears that appetite is pretty large because that book actually has been upsized. What's your view on the stock?
Yes. Hi, good morning, Nigel. Glad to be on the show. I think if you look at the value retail segment that had been under pressure for quite some time is now seeing some improvement. The GST rate cuts has definitely led to some improvement in the consumption demand on the domestic front. I think going forward, things looks pretty interesting from here. This is one of our top picks within the value retail, apart from V2 retail, which is the other stock. The company has shown a strong execution in Tier 2, Tier 3 and continue to look at the structural growth specifically for the value retail model and becoming a physical store format first. I think that is something that is helping them differentiate in this environment. Plus, the management expects to good growth, both in terms of the store additions as well as the same store sales growth, which is kind of inching up. So what we are expecting is at about 20% revenue CAGR as well as about 25 to 28% net profit CAGR over the next 2-3 years. And that reinforces our positive long-term investment case on the Vishal Mega Mart.
I remember chatting with them post the Q3 numbers, and the company said, and I'd spoken to them during the IPO time, and they said we had guided for 20% revenue growth, 25% EBITDA growth, and 30% PAT growth during the IPO, and that trend continues. Siddharth, today Motilal Oswal has written a note on MTAR Tech saying that it's a proxy for data center demand. Can you take us through why is that? What are the key thesis behind this report?
Good morning, Rima. Yes, so we did put a note on MTAR, this being a precision engineering company serving in the niche high entry barrier industries across defense, aerospace, nuclear, as well as clean energy. And the company is increasing its exposure to the global fuel cell technology through it. Decade-long partnership with Bloom Energy. I think what the company is finally positioning itself as the indirect beneficiary of the global AI infrastructure wave. As the world is building more data centers, there is a lot of requirement for a reliable power, and that is where the technology from Bloom Energy that comes in, the solid oxide fuel cell technology that is used to build the battery as well as the power storage system. I think that positions MTAR Tech pretty strongly to benefit from the structural tailwind. I think already this is reflecting in the financials. Q3 order inflows reached a record 13.7 billion rupees, which is up 5 times on a Y-on-Y basis. And nearly half of them were sourced from Bloom Energy. So we believe that this is a long-term structural story in this current environment where AI data center investments is going to go up. And we are expecting MTAR to post a CAGR of almost a revenue CAGR of 40%, net profit CAGR of almost 80%. And hence, we continue to like the stock. That justifies the premium valuation of about 50 times, on which our target price is based at 4,800.
50 times valuation multiple for FY27?
So that is on FY28.
Okay, so 27 would be even higher then.
27 would be even higher, yeah. So it currently trades at about 60 times on FY28. But as I said, the company is growing. So this year, net profit is growing at almost 96%. Next 2 years, CAGR is almost 80%. So that justifies the premium valuation.
And what percentage of the overall company would be a proxy for data center?
So that order book is definitely increasing. And I think currently, if you look at the overall mix, I think that is only going up. So I don't have that number readily with me.
Okay, all right. Sid, what about from the tech stocks itself? Salesforce overnight, that was actually a pleasant surprise because getting into yesterday's trading section, actually Salesforce in after hours trading was down. And then that completely reversed. At first look, the street was disappointed with the guidance. But after the kind of correction that we've seen, some of these stocks are coming back to life. Salesforce was up. You had a couple of other names. Oracle in the last few days has done pretty well. A couple of brokerage notes from global brokerage companies as well have come out. From the Indian basket, the tech index went down, I think, to around 29,800 odd, and it bounced back a little bit. What's the top pick you'll have from Indian IT companies?
So definitely, Nigel, I think markets in this global environment of volatility, and we are seeing news flows coming in every day. Even NVIDIA after results went up, and then we saw profit booking. So a lot of volatility is there. But what we believe is that on the domestic front as well, definitely the AI-led disruption poses a risk to the Indian IT services. Largely, I would say it could be limited to the legacy services business, which could be about 15-18%. And in the long term, we need to see how the Indian tech companies adopt AI to leverage their growth and benefit. So I think in the near term, clearly, one needs to be a bit of cautious and look at the volatility. But in the long term, we definitely feel that valuations have become comfortable. It's kind of become a contra play for investors who can digest volatility. What we like Infosys. This is a play where we believe they have invested into the AI stack, and they have now AI services in their business as well. TCS has done some tie-up, but I would believe that within the Indian IT companies, our preferred pick would be Infosys, followed by HCL.
Okay, we'll slip into a very short break and we'll come back with the pre-opening rates. We'll also be joined by